Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Ted Dixon, CEO and co-founder of IncResearch.ca, Canada's first online financial news and research service, providing insider news and knowledge to investors. His website, CanadianInsider.com, home of the Canadian Insider Club. Welcome back to the show, Ted.
Jim, thanks for having me back, and thank you to everyone tuning in.
Ted, big news in the cryptocurrency industry. Binance is leaving Ontario. What is Binance, and why is it so important?
Well, Binance is the largest global cryptocurrency exchange and platform. It's been around now. I think it started in 2017. It's really the go-to crypto exchange globally to get to trade, in that it's got a breadth of coins on it that in terms of everything from Bitcoin all the way down to innovative tokens. It's got a smart chain platform where they're bringing on decentralized finance type applications. They've got margin trading and they've got futures trading. And so, they've really grown from, a plain, I don't want to call it plain vanilla crypto exchange, but they've really mushroomed into a very large organization that spans a number of different countries. In fact, nobody really knows where Binance is located because they claim to be a global operation, and they have people working, around the world. So that's how they characterize themselves. But not all regulators are enamored with that global operating concept. So it does get them into some, either hot water or gets them into some, sticky regulatory situations, and that is what has happened in Ontario. Because earlier this year, Ontario sent out a blanket notice saying, look, if you're a cryptocurrency platform anywhere in the world and you want to service Ontario customers, you have to talk to us about registering with us. And on Friday, June 25th, Binance posted on its website that Ontario is now a restricted jurisdiction, and would all Ontario customers please close out their accounts by the end of the year. So that came as a big shock to a lot of Binance customers located in Ontario, because now they're losing access to this massive exchange platform. So there's pros and cons with this in terms of what the regulatory action that's happening in Ontario. On the one hand, regulators had to do something in this area, and they are moving forward with a game plan. And I think you have to cut the Canadian regulators some slack here, because they've faced a number of bad situations in the past where cryptocurrency exchanges have gone bust in Canada. I know, for example, locally there was the Einstein exchange, and then there was the infamous sort of Quadriga situation where the founder died and had all the had the security codes in his possession, apparently, or something like that, and there was tons of money lost. And the regulators are stuck, having to clean up the mess when these things have happened. So I can see their perspective. Problem is, when you shut down something like Binance, it's the out of your province, it's the individual investors who are using Binance that end up paying the cost, having to incur the cost of moving their funds off the exchange and going into probably less liquid exchanges. There's costs associated with that. So in any regulatory action, I know there's a lot of people who cheer and say, yeah, regulators are going to protect us. Well, actually, the regulators are reacting to some damage that has already been done, and there are costs associated with regulation. But, I can understand where the regulators are coming from, and, this is a new industry, so there's going to be it's going to be hard to get it right, no matter whether you're an inventor, an entrepreneur, trying to make a new product, or whether you're a regulator, trying to get your head around it. Everyone's learning as they're doing. Now, what's interesting is in BC, it is not, so far, BC residents have not been cut off of Binance, so this is an Ontario phenomenon. Personally, I hope it doesn't get cut off in BC because, I use it. I use it for, access to a blockchain called Solana, for example, that there are no Canadian exchanges that really get you onto that. Yes, if I couldn't use Binance, yes, I could get onto it. It just even makes it more costly. But look, but the regulators can't, regulate for me. They have to regulate for the whole society. So it's a tough job that they've got, and it's good to see that they're moving forward. And I'm trying to be positive here. The Canadian regulators are moving forward. They may not be on the leading edge globally, but they're well ahead of the United States, and that's important for us as in terms of competing. So we're going to get more surprises like this. There is one exchange that's been that's now received, I believe, a license in Ontario. Fortunately, I would say it's an exchange that's backed by a large insurance company, which is, again, is sort of it's helping sort of a bigger player in the market get an advantage, and that's not great, but it is what it is, and hopefully some of these other smaller players will also get registered. And in BC, I believe they've got a smaller player that got a license to application in front of them, and so there are encouraging signs. We talked about this a few months ago about getting some on ramps into decentralized finance for Canadian investors. It's starting. There's going to be some speed bumps along the way. We've had one in Ontario with Binance, but let's press ahead. Let's see where we're making progress. And let's hope, though, that the regulatory process unfolds that continues to encourage innovation in Canada and not just coddle a couple of big players so that they can kind of, build a moat around their business and kind of, take their time and not really innovate. But, look, that's I think it's too early to sort of hit the alarm bell on that. It's a risk, but so far, we'll have to see what happens, and let's hope that we get a few more crypto exchanges licensed in Canada. Again, I can understand why the regulators are gun shy when you've had a couple of exchanges already in the past go bust, holding people's assets. They don't want to see that happen with an exchange that they've given a license to. So things are coming along, and things are happening. So I guess that's the positive side in the news, that sort of Binance is kind of moving. But look, it's a short-term positive for, I think, Canadian crypto exchanges that are hoping to get licensed. And Jim, for Bitcoin and cryptocurrencies in general, this news about Binance, they were also, I think they got a notice from a UK regulator saying it was going to have to limit its operations in the UK. This is not bearish for crypto. This is bullish because it means it's becoming more into the mainstream. As more regulation wraps itself around the crypto industry, it invites more institutional adoption, because institutions can only come into crypto once, there's certain regulations in place, there's a comfort level that they can go to their boards and governance councils and say, yes, we can invest in this because, the OSC is regulating it, or, whoever, whatever competent authority is regulating it. So the overall developments I think are bullish. And I know a lot of commentators go, well, why did Bitcoin go up on Monday with this bad news about Binance running into regulatory issues in the UK and Ontario? Well, because it means that the regulators are moving ahead and they're putting a framework around the cryptocurrency industry. In the medium term, that is, and I'd say even in the short term, that's positive. We've seen Bitcoin bounce back here, and we'll see if it can break through 40,000. But the news about Binance has been taken by the market as a positive, and rightly so, I believe.
Now, countries like China have banned the mining of Bitcoin, saying it uses too much energy. Does that make other cryptocurrencies more viable?
Well, two things on that. First of all, I think it's great news that China is kicking out miners out of China, because it's giving Canadian and North American crypto miners more runway, and they're more focused. These publicly traded cryptocurrency companies, and we just released, by the way, our mining and crypto list for June. Canadian Insider Club members will be able to get that, and Inc. Research subscribers, of course, have that. And there are a number of North American miners listed here in Canadian exchanges. Well, they're big winners from that, and I can tell you, they're focused on using green energy and moving towards that area. Most of them, not all of them, but most the serious ones are. And so it's a great opportunity, and it's good for the whole Bitcoin network, because it takes away the fear of China sort of having too much influence on the network. And it's part of their whole move towards, I hope, in China of getting coal energy use under control. So that's an issue that extends way beyond Bitcoin. So there are special factors in China. Again, I think that's a positive, unequivocal, unambiguous positive for Bitcoin and for other cryptocurrencies too, because it just, again, is going to help take one of the clouds away from this space. We keep hearing about, Bitcoin uses so much energy. So what, right? Like, Disney World uses a lot of energy. Does that make it bad, right? Just because something uses a lot of energy does not make it bad, right? If you're going to drive your kids, to Playland, you're using a lot of energy. That doesn't make it bad, right? So but you've got the detractors. That's the first thing they point to. Bitcoin uses a lot of energy. Well, join the club, join the energy use club. The question is, are they going to use it responsibly? And I think we are seeing the energy use in that industry being taken seriously by the industry. It was a wake up call, and we'll see how they respond. But it seems pretty positive. So that's a positive development. The move by China for the industry. And, it does give these other coins, like you said, a chance to say, hey, look, we're more energy efficient than Bitcoin. Use our network, right? So there's a competition amongst these different cryptocurrencies, and that's great. It's fantastic. That's the way it should be. And, that we have to just make sure that governments, Western governments, stay true to their democratic roots and don't, over-regulate and don't try and start banning things. But, do your job as regulators, put a regulatory framework together, and so again, from that perspective, I think, it's good that the Canadian regulators are moving in the right direction, and I think we have to cut them some slack, even if they make a few decisions here and there that we may not agree with.
Gold has had a little bit of a rough patch, but is the picture brighter?
Well, on In Culture for Money, we have a daily feature called the Daily Briefing from Real Vision, and on Friday we had a regular appearance, usually on Fridays, by Raoul Paul, who is a co-founder of Real Vision, and also he runs a shop called Macro Insiders, I believe it's called, and he was providing his take on what's going to drive the gold price. And so basically he sees three factors driving the gold price. So the first factor he sees driving the gold price is interest rates, right? Like if bond yields are falling, or real interest rates are falling, that's positive for gold. So interest rates kind of spiked up here, but now they're falling back. So I think I think that's a positive. The big problem for gold right now, though, is the U.S. dollar, and the U.S. dollar has been going up, and so that's another driver, and that's a big problem in the short term. And until if we were to see the U.S. dollar kind of stabilize here or move down, that would be a tailwind for gold. And thirdly is the growth of the central bank balance sheet. And basically, that's been kind of slowing according to Powell. And I think there's different ways you can cut this. But his take on it was basically, look, you don't need all three of those to go in together, because I know there's a number of people who believe that gold can go up with the U.S. dollar, and there are definitely scenarios for that, and even Powell will admit that. But what we need to see are at least, I think a couple of those factors kick in together simultaneously, and they're not quite in sync yet. And I think that is his. I think that is his point. So, for those who are looking for a gold breakout, and you can get this on Canadian Insider on Friday. You can just take it's around the 23-minute mark of the interview. It's free. He can explain it better than I can. But until we get kind of a couple of those factors really working together, probably, for the broad market, the worst combination would probably be a rising U.S. dollar and falling bond yields, because that would be a deflationary outcome. But he thinks that would be pretty positive for gold. But if you were to see a falling U.S. dollar, falling yields, that would be and a rising growing central bank balance sheet, the Fed's balance sheet. Well, that would probably be the dream scenario for all investors, because just about every asset would be kicking in. But so you can check out that interview. By the way, his firm is Global Macro Investor. I wanted to get that right, which is where he does most of his macro analysis. But yeah, the three drivers: interest rates, the central bank balance sheet growth, and then the U.S. dollar. So you got to keep your eye on those. And again, it's rare that all three would work together, but right now we have the interest rate one working in its favor, maybe the central bank balance sheet, and certainly not the dollar. A couple of those factors just need to tighten up before he sees a breakout in gold. So I mean that's kind of what I'm trying to get at here with those 3 points. Is you can keep an eye on those if you like that framework, and you just have to be patient until you see those factors kicking in. Gold could just kind of consolidate here for a while, until those factors break one way or the other. I mean, we also look at the gold-silver ratio. It's stuck in a range. So, until it breaks one way or the other, we won't have a clear conviction that we've got, inflation accelerating, which we expect it will do after a pause, or if we're wrong and deflation is, it comes back and sort of has a period of dominance, and we will see the gold ratio move up, and that will change our view on, which assets are likely to outperform here, and certainly we've had, a great, first half for the inflation trade, but, we always have to keep an eye out for a sea change that could happen.
We'll have more with Ted Dixon right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration, with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ted Dixon. Ted, how can the Inc. Canadian Insider Index confirm whether the inflation narrative in markets is still in play?
Well, Jim, the Canadian Insider Index is an inflation-sensitive index. It has a high correlation, about 0.7, to changes in inflation expectations. And the interesting development this year, of course, has been the rise in inflation expectations, and that has been confirmed by the rise in the Canadian Insider Index. As we wrote in our Insights newsletter, which again is available free on Canadian Insider, for the first half of 2021, the Canadian Insider Index, as of Friday, was up 25%, and that's compared to only 11% for the NASDAQ 100. So what you've seen there is the Canadian Insider Index. It is, by the way, it's an index of 50 investable stocks for institutional investors that are preferred by insiders. So we have 50 stocks that rank very high in our Inc. Edge Outlook. That index has confirmed that expectations have been rising. So now the question is, going forward, we've had a great 6 months of the year. What happens next? So it's really helpful to watch this index to see how it's behaving. It hasn't taken out its May high yet, but it's very close since our last chat. It has moved forward despite all the fear around the Fed raising rates, coming earlier than expected. Look, Jim, the Fed cannot raise rates, and they can talk a good game. If they raise rates, there's only two ways they can raise rates. One is if inflation is really roaring and they're playing massive catch up, and it's not really going to be significant. It would just be sort of staying behind the curve in a comfortable way so that nothing collapses. Or they're going to make a policy mistake, and they're going to think they're going to believe their own models, and they're going to do like they did in 2018, and they're going to bring everything crashing down. So it wasn't quite a crash in 2018, but it was pretty close to it. It was a very bad correction, very severe correction in December 2018. So there's only two ways the Fed can raise rates. It can wait and stay comfortably behind the curve, or it can make a policy mistake. So we've had the Canadian Insider Index moving up a little bit. So we still think the inflation trade is intact, but we are mindful that, this has been a good 6 months at least, and we could see deflationary forces try and make a comeback. So we will be watching that. We'll be watching the gold-silver ratio very closely, and if we see the Canadian Insider Index kind of failing to take out its highs in, over the next few weeks, and the gold-silver ratio moving over 70, then, we're probably into a more defensive, deflationary growth scare environment. So let's see how that plays out over the next few weeks. But if the index can continue higher, if the gold-silver ratio fails to move higher, it's been trying. If it fails and it breaks to the downside, then we've got another inflationary period ahead of us, and it would be an interesting time for the inflation stocks, the industrial miners, the silver miners, all the ones that I now hear the bears saying are all done, and that they've had their run, and now that's all done. They may be right. We'll have to see. It's like I said, it's been a good few months. So we'll have to see what the market has in store for us. But I just I don't see the Fed can really take its foot off the pedal anytime soon.
Ted, how can people get more information about some of the topics we've covered today?
Well, a good starting point is CanadianInsider.com, where we have the weekly newsletter called Insights. And you can also check out our Join Us page, which talks about our reports. And if you really want to get into the premium content we have, that's via IncResearch.com. It's a bit more expensive, and it's got a lot more detail though. And if you like doing your own screening, and if you're really if you really like kind of digging into data and consuming a lot of material, the premium, our premium service is a good one to really check out. You can check it out $2 for 2 weeks. But please, if you decide it's not for you, please cancel. It's very important, and it's really easy to cancel if you do a free trial. That's not a free trial, $2 trial, almost free. I mean, the way central banks are going, $2 is, it's not really worth very much. But please make sure that if it's not for you, you can cancel. We do on CanadianInsider.com. It is a flat yearly rate. We do not provide free trials. It's a cheaper service. So so those are two different ways. If you want to participate in our community, we'd love to have you. And you can get an invite to Inc. Chat, where you can chat with me and other members of our community and get a few more reports. So all sorts of ways to keep on top of what the insiders are doing. As Jim, we hope they will lead us to opportunity in the second half of 2021. It's been a pretty good first half, so we'll see what Mr. and Mrs. Market throw our way for the rest of the year.
Ted, thank you so much for chatting with us.
Jim, thanks for having me back.
My guest has been Ted Dixon, CEO and co-founder of IncResearch.ca, his website, CanadianInsider.com. If you have any questions for Ted or any of our other guests, you can send them to info@HowStreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.